The stock market is hitting new record highs, and in this video, I'm going to be going over some of the things that I'm doing and some of the things that you might consider doing too. What's up everybody, I am Jaspreet Singh from the MinorityMindset.com, where money minds rethink rich. The last 12 months have been a real roller coaster in the stock market because some people made a killing with the stock market crash and boom, and other people lost almost half of their life savings and half of their retirement fund when the stock market crashed because they started panicking and selling their 401ks and other investments. Back in February of 2020, the stock market was hitting new record highs. And then come late February and early March, the stock market crashed faster than we've ever seen happen before. And then after April and May, we saw the stock market rally faster than we've ever seen happen before. By December of 2020, the stock market had hit new all-time highs, and some people had made a ton of money, and other people were kicking themselves because they sold their stocks and major losses. Now, naturally, people are worried about what they should do with their stocks. Should you be buying more stocks? Should you be selling your stocks? Should you be holding your stocks? Or should you be hitting that thumbs up button below? On February 7th, 2020, about 3 weeks before the stock market crashed, I released this video where I talked about why I was selling some of my stocks because I had some concerns about the economy. I would love to stand here and tell you that I made that decision to sell because I had some really sophisticated and very formal and very complicated algorithm that told me that the stock market was going to crash, and so I sold right before that. But that really wasn't the case. I honestly just got really lucky. I had some money in the market for a long time, and after the run-ups that we saw in 2018 and 19 and early 20, I decided to pull some money off the table, so I decided to sell. I had no idea that a pandemic was gonna come out of nowhere and decimate our stock market and destroy our economy. If I had known that, I would have shorted the stock market. In March of 2020, when the stock market was in free fall, I was making videos about why this is a great time to buy stocks because market crashes are some of the best times in history to buy stocks because you can buy stocks at a discounted price. Just like before, I would love to stand here and tell you that I knew the stock market was going to rally faster than ever and that I knew the stock market was going to turn around almost overnight. But I didn't. I mean, I'd be lying if I didn't tell you that I was very surprised to see how fast the stock market actually recovered. We saw so many things happen in 2020 that we have never seen happen before. Like, we have never seen the Fed so involved in helping prop up markets. The Fed was pumping trillions of dollars into markets. We saw some of the biggest stimulus plans in history, and we have seen unemployment programs like we never saw before. These were things that nobody could predict, and they helped the stock market boom faster than ever. Now here we are on the flip side of things with the stock market breaking new record highs, and you might be wondering what's next. I'm a long-term investor. I like to look at values. I want to find a company that's undervalued, buy it, and own it for a long time. I'm just not a big fan of trading. It's not my style. I tried day trading back when I was in college, and I made some money, but I lost even more money. I'm gonna go over some of the things that I did and some of the things that I'm doing, but I need to remind you that my strategy is not your strategy. You need to have a plan for yourself because not everyone's financial goals are the same, and if your goals are different than mine, we're gonna have different strategies on how we use our money. Plus, I'm just a random guy on YouTube, so you need to make sure you always do your own due diligence and never blindly listen to a random guy on YouTube. When we saw the stock market crash happen back in March, I was investing pretty aggressively. I didn't expect to see the stock market turn around in 6 months, but I was investing because I thought that this was a great opportunity for me to come in and buy companies at a great discounted price. When I saw a big chunk of my investments grow by 50% or more in less than 6 months, I was pretty surprised, and so I used that as an opportunity to take some money off the table. But Jaspreet, didn't you just say that you don't like trading? Yeah, I get it. When I invest my money, I don't plan on selling it for years. But this was just such a strange situation. I mean, it is weird to see such a fast growth in your money when you still have so many fundamental issues in the economy. We still have a very high unemployment rate. This pandemic still exists. We have lots of people not paying their mortgages. We have lots of people not paying their rent. Yet the stock market just keeps shooting up. So that kind of had me a little concerned as to why the stock market was going up so fast. So I wanted to use it as an opportunity to take some money off the table because that just seemed like the smart thing to do. Nobody can predict the top or the bottom of a market, and I am kind of the belief that green is green. If you made a profit and you sell your investment for a profit, that's okay. You shouldn't kick yourself for not making a bigger profit. To be fair, I am very bullish on the economy. I think the economy is going to soar in 2021 because this pandemic will hopefully go away, and and we will see more jobs come back, and more people will have money, and more people will be able to pay their mortgages, and I think we will see a strong recovery. But there's still a pretty good chance that we'll see a lot of volatility in the stock market because there's a lot of uncertainty ahead. I still have a good chunk of money in the stock market that I plan on holding, but I took some money off of the table just because, it was almost crazy how fast the stock market shot back up. This is why, like I hinted at in the beginning of this video, you need to have a strategy for yourself. Are you a trader? Are you just trying to add some more income to your life? Or are you investing for long-term wealth? You want to start by looking at your goals and let your goals decide what your strategy is, and then your strategy should determine what you do with your money, not just what's happening in the world, because guess what? Things are always going to be crazy in the economy. If you're just trying to make money in the short term and you saw a huge gain, then this might not be a bad time for you to take some money off the table. And if you're investing for long-term wealth and you made a huge gain, maybe you can take some money off the table but let the rest of your money ride. That way, if things go down, then you have cash that you can use to jump in even more. Investing has risks. You are never guaranteed to make money when you invest, which is why you have to just make calculated decisions on what you're doing with your money. The stock market could keep going up, it could crash, or it could go sideways. There are real concerns about the long-term health of our economy. I don't like really talking about politics, but CNN has been a big supporter of Joe Biden, and even CNN wrote an article about how some of his policies could create a potential stock market bubble with things like excessive economic stimulus, which could lead to higher inflation. If the economy continues to struggle in 2021 and people don't have jobs and people don't have the means to pay their mortgages and people cannot qualify for credit, we could see the economy continue to struggle for a long time, and that would cause the stock market to come back down. But if this pandemic goes away quickly and we see companies make more money and they invest in themselves and they hire more employees and more people have jobs and people are spending, we could see the economy start booming, which would help the stock market go up even more. At the core fundamental level, if you are investing in the stock market for the long term, the question you need to ask yourself is, do you believe in the American economy? If you believe that the American economy will continue to grow and prosper, then you should not be really scared about investing your money for the long term, because even if we see a dip or a crash in the stock market, you will be able to ride it out. Booms and busts are part of the stock market and every asset class has it. So if you plan on investing your money for the long term and you believe in the economy, then you should have nothing to worry about. If you don't believe in the American economy and you think the dollar is about to collapse and you think our economy is going to crumble, then you shouldn't be buying stocks and you should just be selling your profits because you don't believe in the future of the economy. Our economy is made up of companies which sell products to people. If people make more money, they'll be buying more products, which help companies make more money, which helps the stock market go up. If people don't have money, which is what we saw happen when the lockdowns hit the United States, then people don't have the means to spend, which means companies don't make any money, which causes the stock market to go down. Now, obviously, this can be manipulated a little bit because the government can print more money and give it to people, so people have money to spend even though they're not earning money, but in general, that's how it works. So when you're investing in a stock on the stock market, you're not just investing in a ticker symbol, you're investing in a company, because now when you buy a stock, you're buying actual ownership in a company. If you go out and you buy one share of the McDonald's company, you become one of the shareholders and owners of the McDonald's corporation. If McDonald's makes more money, people are going to value the stock more and the stock price will go up and you make more money. If McDonald's stops making money, then people will value the stock less and your stock will go down. The economy and the stock market are not the same thing, but they are similar, and the stock market ultimately depends on the health of the economy. Right now, the economy is still struggling, but the stock market is booming because people believe that the economy will start booming in the future. If that does not happen, we could see the stock market come down. However, if you believe in the long-term health of the economy, then over the long term, the stock market should continue to go up too. There's a lot of different ways that you can invest in stocks. You can invest in individual companies like McDonald's. You can invest in funds that give you exposure to the general stock market, or you can invest for passive income. This is why, again, it is so important for you to know your financial goals. That way you can create an investing strategy based off of that. By the way, if you do want to learn more about how to actually invest in stocks and find a good brokerage, our team has written articles on this on our website, theminoritymindset.com, and I'll also link it for you in the description below. If you are looking to invest money, then you should be asking yourself, what's going to be in more demand tomorrow than yesterday? Some of this is pretty obvious, like because of the pandemic, we have seen technology and the use of technology grow faster than ever. Sometimes it's not so obvious. Like one thing that you may want to consider looking at is we have a new president coming into the office, and Joe Biden has different investment goals than Donald Trump did. Donald Donald Trump made a ton of investments into the military, which is why you saw companies like Lockheed Martin boom during his presidency. Lockheed Martin is in the business of creating military equipment. So when Donald Trump and the Trump administration funneled a ton of money into the military, some of that money went into corporations like Lockheed Martin, which created equipment for the military. So one of the things that you can do is look at what the Biden administration wants to change and improve upon, because that could be a place where you invest your money. Some examples are pharma. This pandemic doesn't look like it's going to go away overnight, and so you can bet there's going to be a lot of investments in the pharma industry to help take care of people, or at least hopefully take care of people. Joe Biden has also said that he's a big supporter of alternative energies and green energies like solar energy. So there's a chance that these solar companies and green companies could see a lot more investment. Cannabis. His administration seems to be a little bit more open to cannabis deregulation, so you could see more money flow into this industry. And infrastructure. Joe Biden says that he wants to help fix the infrastructure in the United States, even though I feel like every single president in the history of time has said that, but it's something for you to think about. What you don't want to do is just start blindly buying companies because you think, oh, Joe Biden is going to invest in solar, so let me go invest in every solar company I can get my hands on. You need to be researching companies, understand what they do, and see if this is something you believe in. If it's not something you believe in, that you don't think is going to have value in the future, don't invest in it just because you think a president likes it. Investing is a long-term game. It's not a way to get rich quick overnight, and so you need to make sure you have the right mindset when it comes to investing, especially in the stock market, because the stock market can be very emotional. If you enjoyed this video, here's the video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter, and as always, keep hustling. But in the long run, what really affects the stock's price is its fundamentals. That's how much money is the company making, how are their profits looking, are their revenues growing, are their profits growing, how is the management, and are they innovating for the future?